Wall Street snaps a two-day rally. Stocks recover from a gap-down start to close near the day's high, even as the 10-year yield rises from 3.6 to 3.7%. Investors weigh economic data for any easing in inflation and signs of recession. It's a mixed start to trade for stocks in the Asia-Pacific. The SGX Nifty, meanwhile, is indicating a start in the red if we compare it with Nifty futures. OPEC and its allies agree to cut production by 2 million barrels a day as they seek to stem falling prices, inviting criticism from the U.S. President Joe Biden. He calls the move short-sighted. Crude surges, Brent now near $93 a barrel. The Competition Commission of India approves the Zee-Sony merger after companies allay concerns over market dominance, high advertising fees and channel pricing mechanisms. The merger is now pending approval from the INB Ministry, shareholders and the Income Tax Department. The Department of Financial Services modifies the ECLGS scheme for the aviation sector to give out collateral-free liquidity to tide over cash flow concerns, allowing airlines to avail funding of up to 1,500 crore rupees. Sources also tell CNBC-TV18 that SpiceJet is likely to avail this facility to borrow 1,000 crore rupees to support its operations. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. We come back after a day's break, so we have a lot to catch up on, right? But first up, as always, let's take a look at the Asian markets, largely mixed. Remember, Wall Street, it did recover from the lows, but ended flat in yesterday's trading session. So we have mixed cues coming in from the Asian markets. The Taiwanese index is up 0.3%. However, we have Hang Seng, which is in the red, down 0.5%. Kospi 2 is up 1.5%. Nikkei is higher. So it's largely on the higher side. But if we look at the SGX Nifty and compare it with Nifty futures, because we did not trade yesterday, at the outset, it looked like SGX Nifty is indicating a start in the green. But if we compare it with Nifty futures, it will be a decline. If we look at it, around 150 points is what the SGX Nifty is indicating. So could be a day in the red, in line with what the global markets are suggesting. Staying with Asia and emerging markets, let us get you some important opinion coming in from Morgan Stanley's Jonathan Garner and what he had to say.
Clearly, at the global macro level, there's a lot of things to debate, including the path of the US dollar and global real interest rates. But in our area, EM equities, we are outstandingly cheap. We're trading on one of the lowest forward PEs ever at around 10.0. That's actually below the valuation trough of the COVID recession, which clearly was a very significant event, and actually only a half a forward PE above the trough in the Asia crisis, which I also covered. So we're at very distressed valuations, very oversold. And there's some signs already of healing in the leading edge of EM, i.e. in Korea and Taiwan.
Okay, that is some expert opinion coming in. Just a correction, I made a mistake. It is a 150-point uptick in SGX Nifty if we compare it with the Nifty futures. So that is the rate that you should be looking at. SGX Nifty at 17,439 versus Nifty futures of 17,293. So it will be in the green today is what SGX Nifty is indicating. Let's talk about the US markets now. Wall Street ended Wednesday's trading session, snapping a massive two-day rally with the Dow Jones 42 points lower, the S&P 500 down 7 points, and the Nasdaq Composite slipping 27 points. Stock futures, though, ended higher. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
It looked like Wall Street would be heading for a third straight day of gains as we saw a pretty nice bounce from last week's 2022 lows, but a late rally fizzled and the major averages ended the day with small losses. The Dow ended down more than 0.1%, the S&P with a loss of 0.2%, and the Nasdaq falling about 0.25%. Despite Washington's call for OPEC to keep pumping oil, OPEC and its allies have agreed to cut oil production by 2 million barrels a day in response to the steep decline in crude prices that we've seen in recent months. Now, the actual cut is likely about half that, given some producers really haven't been hitting their official targets, but it was still enough to send crude higher today, with WTI at about $88 a barrel, and that could feed into higher prices at the pump, which is not going to help the fight against inflation. That's the action from the U.S. market. Now back over to you in Mumbai.
Okay, that is all the action coming in from the U.S. markets. In fact, let us get you some important market opinion coming in from Ed Yardeni of Yardeni Research.
They are trying to catch up to the inflation curve, but they've done quite a bit. I mean, since March, we've had 300 basis points in increases in the Fed funds rate. And I think what the Fed is really not paying enough attention to is that the strong dollar and QT2, this quantitative tightening program they're on, they're equivalent to probably 50 basis points each. So I think there's, when you look at the whole package of monetary tightening, they've already done quite a bit. And I think it would make sense for them to do maybe one more 75 basis point hike in early November, but then pause and just see how this whole thing plays out.
Okay, with that, we move on to the final update on our global market wrap. European markets also ended lower on Wednesday, with the French CAC over 50 points lower, the German DAX sliding over 1%, and the British FTSE closing over 30 points lower. The British pound was under pressure after UK Prime Minister Liz Truss said cutting taxes was the right thing to do morally and economically, doubling down on her debt-funded economic reforms. Business activity in the Eurozone contracted more than expected, signaling a recession. All right, that's the global market action, but how will these overnight cues impact our own markets? We have our research team joining in to tell you just that. We have with us today Ekta, Surbhi and Mangalam to tell you what the stocks will be like, the F&O action and the trade setup as well. Ekta, let me come across to you first. What is the market setup looking like today?
Thanks, Sonal, for that. Well, yes, just a quick recap about what took place before the holiday, which was on Monday and Tuesday. On Tuesday, in fact, the positive global cues lifted the markets. We had the rupee, which appreciated as well. It closed at around 81.52, and it was a second consecutive buy figure when it came to the FIIs. The FIIs net bought around almost 600 crores in the cash market on Monday, and then they followed it up with around 1300 crores plus on Tuesday. DIIs also net bought around 945 crores on Tuesday's session. Now for today, the US rally, it seems to have fizzled after 2 days of gains. The US markets closed lower after what was a volatile session of trade, and the private payrolls data was at around 208,000. This was better than estimates of around 200,000. So maybe the street was fearing that, the economic recession is, or the impact of rate hikes is still not here as much as they would like. We also have the non-farm payrolls data on Friday in the US, which will be watched quite closely. For Europe, it seems as though there is some recessionary trend which actually weighed down on the market. So the PMI for September came in at a 20-month low of around 48.1. Now, the other thing to focus on is crude prices, because that's jumped up to $93 per barrel because OPEC Plus is deciding to cut oil production by 2 million barrels per day. So net, that should be a negative for the Indian markets, but as of now, the markets are brushing off a lot of the concerns, and it's indicating a positive start for us. Asia is currently mixed, and China is closed. A couple of other cues. JP Morgan has indicated that India continues to remain on the index watch base on investor feedback. We have a lot of stock specific action to watch out for in today's trading session as well. Back to you.
We do, Ekta. Thank you so much for joining us with all those updates. So let's talk about stocks then. Surbhi will list out the stocks that will be in focus today. Surbhi.
Few stocks to watch out for today, mostly companies with Q2 business update. The first one is Bajaj Finance, where their new loans have declined sharply on a Q-on-Q basis by nearly 8.1%, and the AUM growth has been best in 11 quarters. The next is AU Small Finance, where the deposits have seen nearly a 50% growth on a year-on-year basis, and the AUM was up 42%. RBL Bank, it was a mixed Q2 update where deposit growth has been weakest in 8 quarters and advances growth has been the best in 11 quarters. Next is Z Limited, where the Competition Commission of India, CCI, has approved the merger with Sony. JSW Energy, where the company has signed an MOU with the government of Maharashtra to set up a hydro pumped storage project. IEX has also released their monthly update for the month of September, and it has registered a 5% volume growth on a month-on-month basis at 8,160 million units. And lastly, Godrej Consumer Products has released their Q2 update, where on a consolidated level, they expect a mid-single-digit sales growth, but on a profitability front, they expect a mid-teen decline.
Okay, all these stocks in focus today. And finally, Mangnam is joining in with all the cues from the F&O space. Hey, Mangnam.
Good morning. So, to start things off, we come back from a holiday, so we have to adjust the SGX Nifty from Tuesday futures close. And if you just take a look at the SGX Nifty, it's a start of almost 140 points in the green. So that's good news for our market. The question is what happens from here, because on Tuesday's trading session, both the FIIs and the DIIs ended up buying in the cash market, and that resulted in the big uptick that we saw. Adding that to that uptick was a fair amount of short covering. The FI has bought almost 3,100 crores in index futures, where they added around 5,000 longs, but importantly, they covered 30,000 short contracts, as a result of which from 13%, the FII long position has inched to almost 19%. And that's not all. Remember, on Tuesday, I said that they've written almost 120,000 calls. Well, they've gone ahead and covered 70,000 calls from that, and they've added 61,000 short puts, as a result of which we are expecting some support at lower levels. They've also bought almost at 1.5 times the number of calls than puts, so they are looking for some sort of upside. It is weekly options expiry today. We did see a fair amount of short covering in calls of 17,000, 17,100 and 17,200 strikes, and at the same time we saw a fair amount of writing at the 17,200 put and the 17,300 put. Importantly, now where we open is right in the middle of the congestion zone, where we have the 17,446 50-day moving average and 17,487 the 20-day moving average. The question is whether we sustain this gap up or that gets sold into. For the Nifty Bank, the level that you're looking at is 39,841, which is a few hundred points away from where we are right now in terms of a bit of a resistance. So let's keep an eye out on these levels. In terms of stocks, watch out for Z. A lot of long positions added on Tuesday when the stock rallied almost 7%, and then over the holiday we got the news.
Oh yes, we did. Thanks guys for joining us, for prepping us up for this trading day ahead, and we'll slip into a short break, and as Mangnam was saying, we'll talk about Z Entertainment. The CCI has approved the Z-Sony merger, but with modification. We'll tell you more when we return. Stay tuned. Hi, welcome back. You're still tuned into Power Breakfast on CNBC-TV18. The big news that we got over the weekend, or the holiday that we had yesterday, the Competition Commission of India has given the go-ahead for the Z-Sony merger with certain modification. Vaishta is here to tell us more on that. Vaishta.
Hi, good morning. Well, Z and Sony, which were long awaiting an approval for their merger, have finally received the nod from the Competition Commission of India, and this is a big positive, as usually the CCI approval is the one that takes longer and is a primary hurdle. So CCI had earlier raised concerns on the merged entities' market dominance in TV viewership, on high fee from advertising, channel pricing, etc. Now for this, Z and Sony had made submissions to CCI and since found satisfactory. The modification, the proposal has been agreed now. The final nod from CCI though will take another approximately 4 to 6 weeks, and there is also other pending approvals to be received from the Ministry of Information and Broadcasting. There is also a shareholders meeting which is scheduled on the 14th of October, which is next week. There's income tax approval, there's ROC approval. Now, while there is a certain reason to cheer, what needs to be primarily watched is what are the modifications that Z and Sony will be making, which at present is undisclosed by CCI or both Z and Sony, and the Z stock is trading at an attractive valuation of 15 times its FY24 P multiple.
Okay, Vaishta, thank you so much for all those details. The stock was higher by 6.5% on Tuesday. Moving on, the Department of Financial Services has modified the ECLGS scheme to allow airlines to avail necessary collateral-free liquidity at reasonable interest rates to tide over cash flow issues, allowing airlines to take up to 1,500 crore rupees in credit. And sources tell us that as part of the scheme, SpiceJet is expecting to receive an additional 1,000 crore rupees to support its operations. Parikshit is joining us now on the phone line to tell us more. Parikshit?
Well, this could be a lifeline for the cash-strapped SpiceJet. Sources in the company are telling us that they are expecting to receive at least 1,000 crores as additional support under the ECLGS scheme. They've also requested the government and reiterated the request to bring ATF under GST once again. But coming back to the ECLGS issue, SpiceJet is saying that this will help them in addressing operational efficiency, clear lesser dues, statutory payments, induct new aircraft, and will be important for the financial health of the airline overall. Remember, SpiceJet is currently operating 50% of its flights because of a cap imposed by DGCA. DGCA has asked the airline to show adequate technical and financial resources to run the airline before it can operate at full capacity. So the company has been facing a number of issues. They've sent about 80 pilots on on leave as well. There are salary dues to be cleared. So let's see when this payment of 1,000 crores is actually released to SpiceJet and how it helps the financial health of the airline as well.
Okay, so some relief coming in for the airline companies and especially SpiceJet. Pariksha, thank you so much for joining us with all those details. With that, we'll slip into a break now. Up next, we'll get you all the cues from the commodities market. A lot of action there, right? Stay tuned. Welcome back. Well, let's talk commodities now. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning. A lot of updates in the commodity space today.
Oh, yeah, absolutely. And, crude oil prices are up by 10% in this week. And the cocktail of high inflation, slowing economic growth, and the fact that you have the U.S. midterm elections coming in November, it's all going to be very volatile next couple of months right now. And then OPEC and allies agreeing to cut 2 million barrels per day, which is 2% of global supply, does not augur well. Well, we have seen the crude prices surge for sure, and the markets will watch out for the U.S. non-farm payroll data on Friday. You also have U.S. saying that they will release another 10 million barrels in the month of November from the Strategic Petroleum Reserve. OPEC's next meeting now is on 4th of December, and that is what the markets will keep an eye on. But for the month of November, it is going to be much lesser crude oil that the world will be working with.
Okay, $93 on crude. Manisha, thank you so much for joining us with all that update and what's happening in the commodity markets. But let's stay with the commodity complex and OPEC's decision. Let us listen into what BofA Securities had to say about this. Listen in.
We think from here on, we're likely to see upside. Obviously, 2 million barrels a day is above expectations. Now, I think one of the big questions is, are we really going to get a 2 million barrel a day real cut, or is it going to be a 2 million barrel a day nominal cut that is essentially readjusted by the fact that OPEC itself is producing by 3 million barrels a day under their actual quotas? So I think if you reallocate those countries that are underproducing and they don't actually cut, you'll get probably more like 1.2 million barrels a day actual cut, as opposed to the 2 million barrel a day headline that they're talking about right now. OPEC actually wants to put upward pressure on prices because they are not happy with the levels that they see.
Okay, high crude prices is what we saw over the last couple of days. Quickly looking at the Asian markets, they are still mixed. We have the Taiwanese index, which is gaining ground, which is up around 0.5%, but some selling pressure on Hang Seng. That one is down 0.7% as we speak. And SGX Nifty, which is indicating a start in the positive. If we compare it with Nifty futures, it has come off from the highs, but remains in the green, indicating that the start, yes, could be in the green, but we'll have to see whether that sustains or not. With that, we'll take your leave on this edition of Power Breakfast. Do stay tuned. Bazaar Morning Call comes up next.